Good afternoon, everyone. My name is Aeryn Cagle. I'm an associate on the investor relations team here at the Newchip Accelerator, where we provide founders with all the skills and tools necessary to build, scale, and fund their startups. Now, on the investor relations team, I have the wonderful opportunity to work with venture capitalists every day to increase the volume and quality of their deal flow by introducing them to cohort companies that align with their criteria. Now, when I talk to people about what I do, the number one question that I receive is, how do I become a venture capitalist? Now, that's not really a surprising question. I mean, who wouldn't want to be on the forefront of impact and innovation by investing in people and products that could change the world? There aren't a lot of job descriptions that sound that interesting. So to answer that question, how to be a venture capitalist, how to break into that incredibly competitive industry, I've invited Skyler Fernandes, the founder and general partner of VU Venture Partners, Gregg Adkin, the vice president and managing director of Dell Technologies Capital, and Vincenzo Elifani, an investor at Lego Ventures, here today to talk about their journeys on becoming venture capitalists and give advice to those desiring to embark on the career path. So I'd like to start off by saying thank you guys so much for taking the time to chat with me today and giving each of you a few minutes to talk about yourselves, your backgrounds, and what you do. So Greg, would you like to start us off?
Sure. So I'm Gregg Adkin. I'm one of the managing directors for Dell Technologies Capital. Let me talk a little bit about us. So Dell Technologies Capital, we're the venture arm for Dell Technologies, the large enterprise IT company, right? About 100 billion in revenue with about 140,000 employees. We cover everything from PCs to infrastructure, server, storage, networking to cloud software. Our venture group, we are a separate group. We report right into the structure of Dell Technologies. And while we are a corporate venture group, we actually are set up and structured more like a venture fund. So we invest first and foremost for financial returns. So we look to make great investments for our LP, which is Dell Technologies. We're strategic in that we obviously partner across our business units, right? We use them for technology due diligence and market insight, and obviously go to market. I think Dell has 45,000 direct salespeople calling on the enterprise. As a group, though, again, we're focused on financials. The business units do not tell us where to invest. We make those investment decisions. If you look at us, we're really a early stage investor, right? So we predominantly invest in Series A and Series B. We're agnostic. We can do seed and we can do later stage, but we're predominantly a Series A, Series B investor. About 80% of our investments go there. We lead our deals, so we lead about 70% of our investments. And we take board seats. We do all the things a venture fund would do. If you look at us from the time we started the group in 2012 to now, we've made about 130 investments. We've had about 60 exits, including 6 IPOs. So we have a good financial track record. We invest about $150 million per year. So we invest off the balance sheet, but we invest a large amount every year. So about 15 to 20 new investments every single year. Structurally, if you look at us, we have 3 offices. Our main office is in Palo Alto, California, where we have 5 managing directors. I'm based here in Boston, and then we have a 7th MD in Israel. And we invest in North America, Europe, and Israel. So that's just a high level of our organization and our group and what we do. My background, and quite frankly, if you look at the rest of the managing directors on our team, and it's probably what I'm bigger to share, is it was kind of a philosophy of how we operate and what we believe from a managing director. So my experience, I spent the first 15 years of my career at Intel, all in operating roles. So I started out as an engineer on Intel's 386 microprocessor. I then moved into product management, then went into sales, and then eventually ran strategic marketing for Intel. And then from there, I actually started a business unit at Intel, took it from no revenue to about 100 million. Then went to Intel Capital just as it was starting to expand and made lots of investments for them. And then I left. I went to a small venture fund for about 10 years, had 2 other partners. And then in 2010, moved to Boston to help EMC and now Dell start this venture group, and have been there since 2012. So that's my background and a bit of our team.
That's awesome. Vincenzo, do you want to go next?
Sure. Well, first of all, thank you for having me today. My name is Vincenzo. You can probably tell from my accent and name. I'm originally from Italy, born and raised there, spent most of my life there. Moved to the United States in 2018. Before that, I was at Amazon in Milan, working on a bunch of different projects. And as much as I love Amazon, I realized that I wanted to have a broader exposure to early stage ideas. Okay, so VC seemed like the natural step to just have to just work on many different things and just be exposed to a lot of early stage concepts, technologies, etc. So I moved to the United States, went to graduate school in California, and just during my MBA, I just focused on VC. So whether that was in fellowships or courses, I knew I wanted to do that. And long story short, May 2020 started working at Lego Ventures, which, as you can imagine, is the corporate venture capital arm of the Lego Group, so the brick company. But unlike the brick company, we don't invest in physical toys. So we like to say that we invest beyond the brick. Now, what that means in very practical terms is ad tech, education technology, and gaming, video gaming. When it comes to ad tech, we are more skewed towards younger demographics, so I would say K-12, which is, as you can imagine, the demographic that Lego knows better and can add more value to. When it comes to gaming, we're more agnostic, meaning that we look at everything from hyper-casual video games to new game engines. Which is a lot of fun. As you can imagine, we play a lot of video games, whether it is on Steam or on mobile devices. Lego Ventures is a separate entity from Lego, so we are off balance sheet, which is great because it gives us a lot more flexibility to operate more as an institutional VC rather than a corporate VC. As Greg was saying, we also look at financial returns first, rather than a strategic acquisition. We don't have any funky terms in our term sheet. We usually look at a specific, we usually like to have a board seat. We like to have skin in the game. So whether it is a board seat or a board seat, we tend to push for that. But other than that, it's pretty vanilla, I would say. Lego Ventures is a relatively new fund. So it was started in 2018. So 3 years ago, and we've been investing at seed and Series A stage so far, and we're now starting to look at later stage investments. We are an international team. I'm personally located in the United States, but we do have an investment team in London and one that sits in Shanghai that covers the APAC region. We also have we also have an incubation studio within Lego Ventures that sits in Denmark, and they work with super early stage ideas. So things that you draw on a board, they bring in a founder and they build them from scratch, which is super cool, a lot of fun. And then finally, we have what we call a value creation team. So as you can expect, Lego Ventures, Lego is a big company, a big corporation, still family run, but big international firm. And as you can expect, we have a lot of value that we can bring to our startups. That said, for me as an investor, it would be very hard to go and tap, the VP of marketing or branding or whatever to help one of our startups on certain things. So we have created a value creation team that works directly with our portfolio companies on very hands-on matters, which is really cool. What else? I think that's pretty much it.
Yeah, that's great. Thanks, Vincenzo. And I have to say, I love your background. This is my new favorite background that I've seen. Skyler, would you like to go next?
Yeah, absolutely. Hey, everyone. So thank you for having us. So you can give a quick background on the firm, myself, and also I think why we're really well set up for this topic, how to break into VC. So we launched VU Venture Partners about 3 years ago. So I'm the founder of VU Venture Partners. I brought on myself as well with my partner Andrew Zallison and James Zhang. So it's a three partner fund. We have offices that are in New York, San Francisco, and Hong Kong. Beyond the three of us, we have about a 70-person investment team, so a pretty sizable investment team. We are multi-stage focused, so we do pre-seed, seed, Series A, and Series B for most of our entry point, where our investments are usually about $100,000 to $1 million per company for the initial check, and then we'll invest up to $10 to $20 million in follow-on capital. We will also, we're in the process of raising Fund 2, which is a $150 million fund. Fund 1 is effectively, it's an investor syndicate with about 1,000 plus investors, which has a run rate right now of about 80 to 100 million. We've invested to date about 50, a little over 50 portfolio companies, where we average about 18 investments per year, or about kind of 3 to 5 deals per quarter. And those are across all verticals. So we have internally, we have 6 deal sourcing teams. We have a consumer team that does direct to consumer or retail related products or services. We have an enterprise team that's enterprise broad on any product or services sold to enterprises. So those are our 2 super generalist teams, the consumer team and the enterprise team. And then we have 4 more vertical focus teams. We have a fintech team for financial services that could be either for consumers or enterprises for fintech. We have a frontier team, which has 4 subverticals. We have advanced AI, advanced robotics, advanced materials, and space technology. Then we have a healthcare team, which also has 4 subverticals of health technology, medical devices, biotechnology, and pharma. And then lastly, we have our prop tech team for real estate tech for both residential and commercial real estate and construction technology. So we really do look at all verticals. And geographically, we also, even though we have our headquarters in New York, San Francisco, and Hong Kong, we also have operations across the United States with people everywhere from LA, Chicago, Texas, Philadelphia, Boston. And then in Asia, we have people in Singapore, India, and Southeast Asia, and China. And then in Europe, we have people that are in London and Berlin. And in Africa, we have people in South Africa and Nigeria. So we really are a global fund, and where we have our investment team. On the backgrounds for myself and my 2 partners. So the 3 of us collectively have been doing venture now for about 45 years. I've been doing venture for over 12 years. We've invested in about 250 companies prior to launching VU, and deployed about 1.8 billion during that time, yielding about a 4x cash on cash return. We've done about now, I guess we're approaching 15 unicorns that we invested in. So we were previous investors in companies like Facebook at an early stage, not Facebook closer to its IPO timeframe. But actually early investor in Facebook, as well as Uber, Venmo, Twitter. Myself, I was the earliest and largest investor in a company called Beyond Meat that went public that you guys might know, and served on the board of directors. And another company called FabFitFun, subscription box for women that's now a unicorn. And my partner James was an early investor in Oculus, Oscar, and Wish that just went public. Wish went public at 20 billion. He had a 10% stake at the IPO, so returned about 2 billion. 4xing isn't fun. It took about 8 or 9 years to get there, but 4xing your fund is still a good thing. And so just from one deal. So deep experience from the 3 partners. And probably the most relevant part for this panel is that part of what it makes us so unique is that we launched a program called Venture University, which is really designed to help people break into VC, everything from an analyst through a partner. We've now graduated over 300 people from Venture University's program, which includes an academic portion of the program, as well as the investment apprenticeship portion, where you join VU Venture Partners, focusing on sourcing, doing due diligence, and investing. And you also share in the upside in the investments that we're making. We've had a great track record there of the 300 plus people that have graduated. Over 66% have now joined a VC fund or PE fund within 12 months of graduating. So a much higher success than even if you went to a top MBA program. And really building out a very proprietary group of alumni working at other funds that are also collaborating. And some people have called it the new VC mafia that's being created. But it's been a wonderful thing to help people break into venture, and in many cases launch their own fund. About 25% of the people are emerging fund managers, and so we're working with them closely on launching their own VC or PE fund.
That's fantastic. And Skyler, you mentioned that you've been in venture capital for about 12 years, but before that, you held positions at FIG, you held positions at the South African Chamber of Commerce. So how did you decide that venture capital was what you wanted to do and what you were passionate about?
Yeah, great. So when I entered venture was in it was during the 08-09 financial crisis, which is why I tell people right now is another financial crisis is the best time to join venture. You're getting people that are changing careers or losing careers that they've had before, and they're getting kicked off a cliff to actually go start the company. So I think right now during any financial crisis is a good time to launch a career. But for me, I was at Credit Suisse. 5,000 of us were let go in the same day. They brought us into a conference room and said, "You're no longer an employee of the company." And so I said, "Oh crap, what do I go do?" And so I was thinking of doing an MBA program or joining a VCPE fund. Ultimately said I wanted to start a company, and so I started a tech startup with a woman named Jenna, who ultimately became my wife. And when we were raising capital for that startup, one of the venture funds that invested in us eventually hired me as an analyst to join their team, where I was there then for about 5 years. Was fortunate then to launch Simon Venture Group, an S&P 100 company and the largest retail real estate company in the world, which at the time had more sales than Amazon and Apple combined. It's no longer the case, but it was amazing how large Simon actually was back then, about 7-8 years ago. And then from there, ended up launching Cleveland Avenue, co-founded with the former CEO of McDonald's, focusing on the food and beverage industry. But I think for me, the passion really was I wanted to be part of figuring out the future of human civilization. And there was no more better career I could find than actually being having a small role to play in deploying capital into the best spots to be able to do that. And I know Peter Thiel had a famous quote from the past, which is, "We wanted flying cars and what we got was 140 characters." And so I think for me, while I'm focusing on returns, the best thing that has happened as we build out our current portfolio of 50 plus companies has been going after the largest market opportunities that the world has. So we're investors in the future of lab grown food, the future of lab growing all different parts of your body, to electric engines for aircraft, to space technology. And it's a wonderful career to have, where you can focus on solving the world's problems while also shooting for financial returns in the process. But I think that's, for me, what gets me up every day is just being part of moving humans one step further to continuing to exist versus not existing.
Absolutely. I think that's so exciting. And I think it's so interesting how so much greatness and so much innovation can come out of tragedy. When we have financial crises or we have, global pandemic, so much innovation is increasing. People are, what should I do? And they're going to start that business that they never thought that they would. And that's amazing. Vincenzo, similar question to you. When did you learn about venture capital and when did you decide that you wanted to pursue it?
Great question. So back in Italy, back in 2015, this is an interesting story. I was doing an internship in one of the very few venture capital firms in Italy. Very small market for venture capital overall, but there are a few, firms, few companies, and I was very lucky to be interning at one of them. Back then, Uber was entering the Italian market and was trying, to partner up with a solid strategic firm to battle with, unions and taxi unions, et cetera, et cetera. Italy in general is a very political country, as you can imagine. And so I was lucky enough to work on this deal. And then I realized, wow, this is great. Just working on having so very few numbers to look at, but still trying to extract the potential out of it and looking 5-10 years ahead. That was mind blowing to me. So that was my first, first interaction with the world of VC. Then I took a detour. I would say I worked at Unilever, both in Italy and the Netherlands on marketing and brand development on very global brands. And then as I mentioned before, then I transitioned to Amazon in the Milan headquarters, where I worked on very hands-on, very data-driven role project. And then decided, okay, as I mentioned, I wanna be in VC. This is what I wanted to do, and the most logical thing to do for me was to move to the United States, and that's why I went to graduate school. But to me, essentially, and what I can confirm just working in VC is I like the very high-level strategic work that you do as a VC, but also when you work with early-stage companies, it's also great to just learn, okay, how do you get that customer acquisition cost, so low with Facebook ads. So learning very tangible things that you could use potentially at your next, startup. That's really exciting to me. And yeah, that was pretty much why I decided to get into this industry. I guess it's a combination of analytical skills that you have to have, but also very hands-on, very tangible, very concrete, sort of mindset that you need to have in order to be a successful VC and also add value to your portfolio company.
Yeah, that's great. One of the reasons I wanted to do this panel is I love hearing people talk about their jobs in venture capital because they always seem so excited and so passionate. They're on the forefront of innovation. They're seeing all these amazing things and they're just so happy. And I think it's fantastic. Gregg, so your background's a little bit different. You got a degree in electrical engineering, right? And began your career at Intel working in operational capacities in engineering and sales. How did you transition to VC? Like, how did you decide that that's what you wanted to do?
Yeah, I mean, good question. I think, a couple things. One is my whole life, I felt like I built things, right? Initially it was building products, right? And now I try to help entrepreneurs build companies. Really, the transition came sort of in the later part of my Intel career, right? So I moved into strategic marketing and really started looking at how does Intel move into new markets, right? This was in the 90s and we were obviously doing incredibly well, had a very strong microprocessor business, but how do we go elsewhere? How do we broaden out the business? And then got a chance to start a company, if you will, inside of Intel. It took that from, basically it was a handful of us to 100 million in sales. And then got the opportunity then to move over to Intel Capital, right? We had this small corporate venture group, about 3 people, and they really wanted to expand it. And I was asked to go over and help. And so I wanted to take sort of all that experience that I had from Intel, from an operations standpoint, sales experience, and starting a business and go help other entrepreneurs. And really, that's been sort of my key focus is, right, how do I help entrepreneurs build successful companies, right? And that's just kind of excites me, if you will, and what I've tried to do for the last 20 plus years.
That's amazing. And so let me ask you as a follow-up question. So I mentioned earlier, venture capital is a very competitive industry. Everybody wants to be there investing in amazing entrepreneurs and things that are going to change the world. Why other than that, do you think that VC is such a competitive industry?
Well, I think first, a lot of people don't realize how hard the business is, right? So, right, when you look at actually the venture capital industry, only the top quartile actually make money in the venture business, right? And so when times are going really well, the number of funds get pretty large, but when markets turn, and they will turn, right, a bunch of venture funds and corporate ventures will drop out because they don't make money, right? And so that's why it's competitive, right? It's a very cyclical business, right? And when you're in good cycles, you do well, but those that stick around for the long haul, they make money year after year after year, right? And it's not easy, right? And I think you touched on it early. I think everyone sees the exciting part of the job, I'll call it, right? The 20% of our time, which is going and talking to these brilliant entrepreneurs and these great ideas and looking at all these great technologies and then trying to figure out, okay, I'm going to go make this investment. But the really hard part that no one sees, and you spend 80% of your time, is after I make the investment, right? Especially early stage. After I make that investment, to go build a company is non-trivial. It takes 7 to 10 years generally before you see an exit, right? So a lot of people don't realize that, right? And you're spending lots of time with these entrepreneurs, helping them try to figure out their strategy, their go-to-market, introduce them to customers. You're trying to fundraise. You'll go through pandemics where you have to now decide, do I downsize the company? Do I stay, so there's lots of issues that go over that 7 to 10 years. And I think all of us could probably point to great companies that a couple times along the way you thought weren't going to make it, right? And so that's the piece that people don't see. And I think the really good venture capitalists, that's where they spend the majority of their time. They're focused there and they bring value to the entrepreneur and help them get to that next level. And like I said, it's a lot of hard work and a lot of grinding out, hours to help them get to that next level. And so that's why I think it's competitive and why only some people stay in this business for a very long time.
Yeah.
If I could add on to that, Aeryn, I'd say I think agree with everything that Gregg said, and I'd add on to it that part of what makes venture such a competitive career is that there's the very few number of venture funds that exist compared to other types of roles in finance. So if you compare the number of hedge funds, private equity funds, asset management groups, investment banks, there's just a lot fewer venture funds. And the funds that do exist, there's fewer number of spots at those funds. So they're, typically $50 million funds to, $1 billion funds, but they only have anywhere from like 5-person teams to 20-person teams for the most part. You obviously have the mega funds, but even those mega funds are like 50 people on the investment team. Even at Andreessen Horowitz, it has like almost 200 people. There's only about 50 people on the investment team. And so again, other than those like small, 20 or so multi-billion-dollar funds, most of venture are, teams of 5 to 10 people. So there's just not a lot of spots for people that are in venture. And again, if you think of the size of the asset class, all of like 2020 was like, 150 to 170 billion dollars or so. And that's like the size of a really large private equity fund. Like the entire asset class of venture is like the size of a big private equity fund. And the size of your assets under management basically dictates how many people you can have on your investment team to pay for salaries. So part of what makes it just there are very few spots in venture that you can get hired by. The second part of what makes venture so competitive, I think what Gregg brought up, is that only 25% of VCs ever receive a carry, and you don't know if you're good at your job until about 5 to 7 years later. So you can actually be terrible at your job and not know it for a while, and the feedback loop is so long. And so staying in venture also becomes the hard part. But if you can stay, there's a great longevity career. But those that are successful in venture oftentimes move themselves out of the industry because you start raising more and more capital with every fund, and you kind of move yourself away from even doing venture and to more what is really large growth venture private equity, because you realize that the risk is just so much lower and your probability of getting a carry is so much better the later stage you go with larger capital. So even if you're successful, staying in venture is also a hard thing to necessarily do over the long haul. But I think the initial competitiveness to get in is that just so many people want to do the role. You have the rise of Shark Tank. Everyone has the awareness of what venture kind of is, but there isn't really also great career paths to doing it, which is why we created Venture University to begin with. The old way of hiring people for venture was, first, if you had any venture experience, it was a real differentiator if you had any prior investment experience in venture. It's probably about 1% of the people that actually apply for roles have any prior VC experience. The next level down is like, do you have any operating experience at a startup that you've had any meaningful success? That's the next larger candidate pool. The next candidate pool after that is usually, do you have any investment banking or consulting experience, which is basically just a filter of, do you know how to use Excel and PowerPoint? And maybe do you know how to, think strategically about stuff? But that's a much larger pool of candidates. And then the biggest pool of candidates are people that went to top undergrad or MBA programs. And then after that, the applicant pool looks pretty weak. So the challenge is actually when you're trying to apply for a job, how do you actually differentiate yourself for the things that matter? And academics, like you could learn anything you want, but it's not actually the same as actually having investment experience. And that's really why we created Venture University, to give people the actual high quality experience, very different from an internship, but an apprenticeship where you get to do things like you get to pick what deals are brought to the partners meeting, you get to pick what deals are brought to the investment committee, you get to vote on the deals. So it's a much more elevated type of role than an internship. And you get the upside from the investments that we're making every quarter. So putting yourself in an environment where you have real quality investment experience and you can start building a track record of deals you're doing, that's probably the best way to get hired, because when put yourself in the position of a hiring manager, you want to hire other people that have relevant work experience in doing venture, not just academic, you've learned it from an MBA or have some investment banker consulting experience. That's like your second, third level quality of candidates. It's probably not the best thing of what you're looking to hire for.
And Skyler, I would say, what you're doing is fantastic, by the way. And if you were to look pre, the internet bubble, if you will, and the crash in 2001, the venture business was an apprentice business, right? You generally, the early stage, the venture funds, basically you work for a few years at a very good company. You might have gone back, got your MBA. You came in as an analyst, then you got promoted to a principal, then a partner, and then eventually a general partner or managing director. And the senior people worked your way through and helped you get all that through there. And it took you years to finally get up there. And that's the way the business had run for 20, 30 years. After the 2001 crash, I think a lot of venture funds said, I don't have the bandwidth to be able to have apprentice. I'm going to bring in people who know how to make investments because I've got to make returns, right? And I don't have time for that. And then I'll hire a bunch of really smart analysts to do analyst work, and I'll hire a bunch of smart BD people to do. And so they've specialized it. And so there isn't that apprentice capability anymore, which makes it harder to break into the industry because people don't want to go back and help apprentice and manage and train. And so it has changed over the last 20 years. And I think it's even harder in some ways to get there.
Yeah,
I agree. I agree with that. Based on my personal experience when I was a graduate student, and I agree with what Gregg said before, that I I think the appeal that comes to the part that is more appealing to people about venture capital is one of the few jobs that really makes you wear different hats. Meaning you have to have very analytical skills, and you got to be an operator at the same time. And no, what Gregg said is very important. Like, people have this conception that venture capital is about finding a great company, writing a check, and that's it. Okay, but they forget about all the hustle that's beyond that, and that actually adds value and then brings you to IPO. And one example that we had at Gregg Adkin, March 2020. Full lockdown, ad tech companies had to change their business model. Now we're not selling anymore to school administrators and school districts. We're going direct to parents. And that's a major shift. Okay? And all of a sudden, you don't need those skills personal anymore, but you're going on Facebook. And what happened when the full lockdown happened? Facebook ads went off the roofs in terms of pricing. So this is to say you need to have that operational experience as well. So I agree with what Gregg said, what Gregg was saying, and Skyler, you're doing a great job with the Venture University. I agree with that. I was a student not long ago, and I can relate to how important it is to have mentors in the industry and to sort of craft that path with fellowships and programs like the one you guys are running.
Yeah, I mean, what I think is really great is that you guys are getting to the core thought behind the question. It's not just how do I break into VC? That's not what people are really asking. They're asking, how do I become a successful venture capitalist? Like, how do I get out of this what I want to get out of it? Because it's not just about getting into the industry, like you guys were saying. When Gregg said it's a hard industry, both Skyler and Vincenzo, you guys were like, and it's hard to stay in that industry. It's hard to be successful. You have to be committed. You have to be passionate. And so I think it's really interesting that we got to the core of that question. So let me ask you guys the next question. And Gregg, we'll start with you. What is something that you wish that you'd done a little bit earlier in your career or in your life that you think would have helped you to become more successful in venture capital?
Well, it's funny. So I guess when I step back and I look at what does it take to be a successful venture capitalist, and we really look at when you get on a board and add value to an entrepreneur, I break it down to, I call it SPIFC, right? And so S is for strategy. You need to help your CEO figure out the strategy, right? So you have to be a good strategic thinker. And this is going to what Vincenzo says, you wear lots of hats. P is for both people and process, right? You got to help the entrepreneur recruit really great people to the company. And you also have to help them build processes so they can scale the company, right? You need to help them with the image, right? What's the image? What's the brand of the company you want, right? And then F is for financials, right? Early on, cash is like oxygen, right? You've got to make sure you spend that cash appropriately so that you're adding value and that you have enough cash to stay alive, right? And then finally, C is for compliance, right? We have rules and regulations on managing that. And so I think that, I look at that and I go, okay, what has helped me? If I really look at my career, the first 15 years of my career, I actually did all of those different pieces across it, right? So when I was in engineering, I was, all about, how do I build, product and how do I build processes to build out the, the product team. When I was in strategic marketing, I was thinking about where do I want to go as far as from Intel, where do I want to invest in new businesses, right? And so I was fortunate that I've done a lot of the different roles, from sales to marketing to engineering. And so I don't know if there's anything I would do differently. I think the biggest thing is that I was fortunate enough that when I went to my venture fund, I had a very senior partner who took me under his wing, and that's where I got my apprenticeship, if you will. And so I spent 10 years with a gentleman who'd already been in the industry 20 plus years. And that's where I really learned a lot. So the first 10 years, even though I was making investments, I was not a great board member, right? I didn't really understand. Even though I had the skills, I didn't know how to apply them. And I think this second 10 years now, I've really learned how to apply those skills. And so I wish, I guess maybe I went back, how could I have applied more of those skills and help my entrepreneurs out more early on in my career? I think I could have been a better venture capitalist, better board member had I learned those quicker and applied them quicker to help my entrepreneurs. So long answer, but that's kind of how I'd look at it.
Yeah, no, I think it's a great point. I mean, a lot of times people trying to break into VC, they have similar mindsets to a lot of entrepreneurs where they're like, I can do everything myself. I don't need any help, blah, blah, blah. But, when you ask people what helps you become successful, and they say, having an apprenticeship, having a mentor, networking, talking to other people, growing in that way. It's very eye-opening. Skyler, do you have anything to add to that?
Yeah, I'd say if I was to talk to my younger self in doing venture, I'd probably say have a higher bar of what extraordinary means to you when you're making investments. I think just being able to pull a trigger to do a deal can be exciting, and when you're early on in your career, you just want to do a deal to start doing deals. But you get to a point like now, me 12 years into doing venture, I've done over 100 investments. Like, I don't really have like a need to do another investment. Like, I'll keep doing investments, but I don't like have like a desire to just keep on making investments. I'm actually just really looking for the most extraordinary opportunities I can find to invest in. And if they don't hit that high benchmark, I'm just not interested in doing another deal. And so I think that's a really healthy perspective, I think, to evolve into. I also think that early on, I didn't really know what the difference between a good versus a great deal was. And until you start looking at a lot of opportunities, that doesn't really become clear, especially when it comes to market size opportunity. I think for me, the biggest eye opener was what an actual large enough opportunity is. It's probably where I see the biggest mistake for initially emerging fund managers, is there's an unfortunate move to the shiny object syndrome, and not just focus on really massive markets. And for me, the minimum target market that I'm really looking for is 10 billion or more. And that's a true bare minimum. Most of the investments we're doing are much larger than $10 billion. But if it doesn't hit that as the actual math equation of how many customers actually exist, multiplied by the revenue of that business, has to equal, if they had 100% of that market, 10 billion or more. For me, that was a real critical one earlier in my career, realizing like, you can't get a venture return if the opportunity is not really massive. And so one of the other things I would tell my younger self is, the MBA answer for what matters the most is team. I think that's the reason that MBAs also give that answer, is they're kind of looking at ladder climbing amongst big corporations in companies that have already established that the market's large, and it all just comes down to executing because the market and business model is already proven out. So yeah, team matters the most when it just comes down to executing that. But in venture, I'd actually give a slightly modified answer, which I don't think team is the number one important thing. I think market actually trumps team. If I had to choose between an A team and a B market, or an A market and a B team, obviously I'd like A's for both of them, but if I had to choose one versus the other, if I had the best team in the world that was going after a smaller, medium-sized market, I just can't get a venture return. And if I can get someone who can at least execute something that going after a really massive opportunity, there's always the opportunity for an irrational return multiple or irrational exit multiple from an acquirer, where you can get acquired for $1 billion in 2 or 3 years without actually having much traction. But because you're going after a big enough opportunity that threatens some of the incumbents, things like that can happen, and it's very asymmetrical in venture. And I think not appreciating the power of a really massive market opportunity is something that I would definitely highlight. Again, team is certainly still very important, but I would just go back to the reason you're going to get acquired for the most amount of money in the future will be largely first on team and the opportunity of growing into that big market. Second is on that ability team for that executing. But very different for the venture game versus the private equity game. The bigger you go up, later stages, team becomes even more important than market, but that's because that's already established and the business model is already working.
Yeah, and I just reemphasize, I agree with Sky. Market, right? Big markets, there's always the answer. How many times have you seen where maybe it's not the best product, but it's a huge market and the team executes and they win, right? And I can name lots of companies where they weren't necessarily the best product, but they had a huge market and the team out executed others and they won the market and returns were fantastic, right? And so, and when I look at companies, that's one of the key things I really like to see entrepreneurs is how well do they at least can frame how big that market is and kind of what are the assumptions they're making about it. Not that I expect them to come right out, out of a startup, early on, but they've made a bunch of assumptions. And so how do we test those assumptions fairly quickly, right? To really validate that market size and how we're going to go to market and how we're going to attack it and all those things. Because big market, you can make mistakes and still be a winner.
Actually, one other thing I might add in there too, just thinking about my younger self of what I would educate them on. One of the benefits I think of people breaking into venture now versus like a decade ago is the cost of innovation continues to go down, and so you get able to get traction early and earlier than ever before. So if you're looking for capital efficiency of like proving that a business model is actually working, you have the luxury that sometimes at the pre-seed or seed stage, you actually have capital efficiencies that are proving themselves out. And the most competitive startups that we're investing in are showing that to be the case. It's not the Series B companies that are just, maybe optionally profitable, but A or seed companies are potentially becoming profitable. Example, like I invested in FabFitFun. They put 200,000 of the founders' money and grew that company to 12 million of revenue and profitable with just 200,000. I came in with 3.5 million, and they didn't raise any other capital for 4 years with that 3.5 million, and they grew from 12 million to over 200 million of revenue, and now worth over $1 billion. And so I think the fact that you can start using more private equity logic of capital efficiency of how much money has been spent compared to what their current annual run rate is of revenue is something that is now happening in venture, where normally it was just grow revenues at all cost, or now you can actually use some, for a lot of companies, some fundamental aspects of capital efficiencies, and thinking about investing in companies at rational revenue multiples, where as long as they grow revenues and exit at the same multiple you're coming in at, you've de-risked it significantly. So I think a lot of the private equity game is starting to go downstream to the venture game for many of the top tier companies.
Yeah, that's great. Vincenzo, do you have anything to add to that, of what, if there's anything that you would do earlier in your career, early in your life, to be more successful as a venture capitalist?
Yeah, I would say read more. Read more about the industry, what happens in the market. Many people, I think many people have these misconceptions sometimes when it comes to VC, that they have to be great at financial, and I'm talking about early stage VC, that they have to be great at financial modeling, that they have to know all the terms in a term sheet, et cetera, which is good to have, which is great to have, and they're going to test you on that as well. But the main thing is, do you have a thesis? What do you believe in? Where do you see the market going in 5, 10 years? Who would you invest in? Do you have a list of companies that you feel are fun to take a look at? So, and that comes, and I'm talking as a generalist. Okay, I've never specialized. I'm never going to specialize, and so as such, you really need to craft your view about the world in general, and that is not easy, because at the beginning you might be interested in many different things, but you might not know. Okay, I think this is what interests me more, or this is what I could have more value. Okay, this vertical, this industry. So that comes with time, and it takes a lot of time to just digest all this information, and putting the pieces together. I mean, VC is a lot of putting the pieces together, just like Lego bricks. Okay, you craft your thesis one piece after another, and then you potentially, you add value to a fund and to your portfolio company. So my advice to my younger self would be read more. Okay,
Read more. Do you have
and build your own thought, build your own thesis. What do you believe in? Okay, that's very important.
Do any of you have a favorite book that you would recommend?
Yeah, I'd say for me the Bible book is the Business of Venture Capital. It's one of the few books written by a VC for VCs to read. Most of the books out there are for founders or startups to read, and there's a lot of great ones there. But I think if you're truly looking to get into venture, the Business of Venture Capital is great. I think one of the takeaways from that is that, as Gregg said, the venture capital industry really start off as an apprenticeship, and that's what we were trying to bring back to begin with Venture University, is to bring back that and increase the quality and quantity of people breaking into the industry. But yeah, the Business of Venture Capital is a pretty enjoyable book to read, but it's very focused on covering most of the core topics that you want covered to learn about the industry.
Mm-hmm. And Skyler, so you work with so many people that are aspiring to be venture capitalists, that are passionate, that want it. You said you graduated over 300 people from Venture University. Let me ask you, you meet so many of these people. Can you tell when you initially meet them who you think is going to be more successful in venture capital, or is going to be more committed to staying in venture capital? And if so, why?
Yeah, that's what our admissions team focuses on, that a lot, is kind of figuring, because we only accept about 1% of the people that apply. So we've had about 27,000 applications over the last 3 years to get to those 300 people. So our admissions team is highly focused on a few things. One is the true passion and background that you've already done to invest yourself into the industry. So do you already have kind of a basic understanding of, who are some of the top accelerators, who are the top funds? Can you name startups that are not public that are worth over $1 billion? So there's like surface level, are you already showing that you're dedicating some time to learning about the industry? Do you know the high level differences between like pre-money and post-money valuation? Surface level questions like that. But after that, it comes to, are you someone who is truly a dynamic thinker and will have a lot of level of intellectual curiosity? Because one of the initial challenges of the industry is that, seeing yourself on Shark Tank, the idea of like being pitched lots of startups every day sounds good, but do you actually have the stamina to see like 3 to 5 to sometimes even 8 startups a day, but usually call it 3 to 5 startups a day, and be just as passionate the next day to come back and see another 3 to 5 companies and ask? It's kind of like a game of 20 questions. It's just like, what's the fewest number of questions you can ask to get to the core of whether or not this is a great company? And if you love to be intellectually curious and a dynamic thinker, I think this is a great career. So we're looking for people that have that passion for that. We have a few internal tests that we do whenever we're hiring people on intellectual curiosity. I think that's probably, for me, what I've seen long-term success seems to be that if you're a big fan of escape rooms, I think that's also been my best data point of like people that have been successful. Some of the best, we do an escape room once a quarter. Some of the best people I've ever hired really outperform in escape rooms. I think it goes back to just like dynamic thinking, being under pressure and doing well. Kind of brings out. So we've actually thought about like the next few people we might hire. We might do an escape room where I do it with them. It's like Hunger Games, where you can see your other candidates that you're competing amongst, and I'm going to pick someone after the escape room. But I think it comes down to like, are you someone who has that hustle and doesn't need a structured environment? That's the other thing is there's going to be overall a relatively unstructured environment where you have to lead yourself. But it is a great career, I think, for men and women as well, because it's a very flexible hours. You can kind of do it from anywhere. But for me, I think it's the best career I've ever found. But the test is really going to be, do you have that stamina to keep on doing this? Because initially it sounds good, but do you want to make that your life?
Yeah,
and Skyler, I like that, the escape room. I never heard that one before, but just a real sidebar. So my family, every time we go on vacation, we look for an escape room. That's part of our vacation kind of thing. We love those things. So I never heard that before. I think I've been in 15, 16 different cities in the US. I've already done escape rooms.
You get better at them too. The more you do them, the better you get. Yep.
Exactly, right. And we're always timing to get out, and let's ask as few questions as we possibly can to get this. And we break up into teams and track it. So yeah, that's a good one. I like that. So sorry about that.
Oh my gosh, I love it. We are currently hiring our intern class actually for the summer here at Newchip, and I'm going to walk out of here and be like, guys, we're going to have them do an escape room. We're doing this. This is
have all the candidates compete against each other and doing that.
We will. I'm so excited. That is the best idea I've heard in a while. I love it.
Yeah.
I love that you mentioned talking to them ahead of time, people that apply for Venture University, about what they already know about venture capital and how interested they are already in it. Because I think there is a lot of people that get interested in venture capital as the idea of it. They're, oh, this is so interesting, I'm going to talk to all these startups, but they don't actually know anything about it. They've never actually talked to maybe a venture capitalist in the industry. So they didn't have that apprenticeship role. They just have this image in their head of what it looks like, and it's not exactly accurate. But Greg, can you add on to that of what, over the course of your career working with other venture capitalists, that you've seen is kind of the big differentiating factor between people that are successful and committed to the industry and people that are not successful or end up leaving the industry?
Well, I think Skyler hit on one of the key ones too, is that curiosity, right? That always that drive to want to continue to learn, right? Because when you look at it, it's a very evolving business all the time. It's not just new technologies, it's new business models, right? It's new go-to-market approaches, right? When I started out, there was no such thing as open source, right? Today, it's a thriving part of our business, right? And I have several successful companies there. I knew nothing about open source when I started in the business, right? So it's just constantly evolving, and you just got to keep yourself, you have to want to learn, right? As much as that entrepreneur, and you want to have to keep growing and getting better and being inquisitive about different things, right? So I think if you have that kind of mind and that really excites you, right, I think you can stay in it in the long run and really enjoy it. But you have to really enjoy that piece of it. If you go in it because you think, oh, I'm going to make a lot of money, that's not going to work, right? I think the really good, successful venture capitalists, not that they're confused that the job is to make returns, but it's that inquisitive nature that they have, and that enjoyment of that inquisitive nature is why they're able to sustain it over the long haul and be successful.
Absolutely. I love that. Vincenzo, do you have anything to add to that?
Well, I think Skyler and Gregg said it all, and I couldn't agree more. Intellectual curiosity is probably one of the main characteristics that I've been looking in people. Because people don't realize how much time venture capitalists actually spend reading. Whether it is newsletters or articles, you have to know what is going on in the industry, and even industries that are not related to your specific territory. So a test that people could do if they are thinking about getting into VC is assessing, okay, how many newsletters do I read about VC nowadays? Okay, now that I don't have a job, okay, that's an easy test. So I couldn't agree more. And intellectual curiosity is essential also because you have to be very flexible in this job. You're not going to have all the answers. Okay, you have to be flexible, both in terms of how many pieces I can put together, okay? And that comes with curiosity, okay? I don't have all the answers to this business, but, maybe I can go and find them. Again, so I agree with Skyler and Gregg. That's probably one of the main characteristics on at the same level as financial acumen.
Mm-hmm. Yeah, absolutely. Now, I know we are running close on time, so I will ask one last question of each of you. And I like to ask this question anytime I do a panel or talk to people with industry expertise to see what they think and what they would advise. We kind of already touched on some of these points, but what I like to ask is if you could leave everybody watching with this, every aspiring VC, every entrepreneur trying to learn more about venture capital, every young individual watching this with one bit of advice, what would that advice be? Vincenzo, if you want to start us off.
What advice? Well, I think I mentioned that before. Read more and craft your thesis. Think, just and don't be shy to just come up with bold ideas. Okay, don't just repeat the same things that maybe you're read in here or there. Be bold with your idea. That would be my advice. Yeah.
Absolutely. Being bold in venture capital is definitely a necessity. You have to be bold enough to say, I think this is an amazing idea. I think it's a big enough market. I think this is going to work out. Gregg, do you have any other advice that you would give?
Well, mine's more just a generic. I give this to my own kids too, which is I just think pursue whatever you're passionate about, right? Because at the end of the day, if you're passionate about it, like I don't think about the hours I work, right? And I think if you're going to be successful, you don't think about it. You do it because you enjoy it, right? And you show up every day because you want to show up and you want to go do it, right? And so, I would say go after things that you're passionate for, and things will work out in the long run for you, right? So that would be my advice.
Yeah, definitely.
I guess advice there would be if you want to pursue a career in venture, I think it's really a bet on yourself, and you have to be prepared that the long term of your success is going to be making you successful, not a company successful. And so if you think of the best brands in venture, they're all very much identifiable with the people behind them. It's very different from like investment banks or hedge funds where they're kind of just known as a brand. Venture is very much, the people. And so you have to be someone who's going to be very comfortable marketing yourself, marketing the deals that you're doing, and being a lot more public. But it is much more of a bet on yourself. And I think long-term, that's also what creates a long-term career. If your career is ultimately structured around the success of your personal brand, not the brand of others, that's where you can also make the most money. But, from the day that we're born, you start kind of initially being branded by the family that you might be part of and the situation that you start off with. Then you're kind of acquiring brand by trying to go to a school, and that kind of becomes your identity. Then you try to work at a top tier group so that you would you kind of acquired that brand identity to kind of make yourself seem more appealing. But ultimately, the true level of success is where it's just you yourself are actually the brand that's successful. And the more you can do a bet on yourself, the more long-term and successful you can become, but also where you control a lot more of your destiny. So I think breaking into venture is also one where you're really making a bet on yourself, and not a bet on just joining a firm that'll pay you more and have a higher bonus.
Yeah, absolutely. And I think the three of those things tie really, really well together. You're betting on yourself. You have to be bold enough to bet on yourself and to be committed to this. And you have to be passionate enough about it to stay committed to it and to be successful in venture capital. So I think that is a great place to end. I think it's wonderful advice, definitely something that I will take to heart. And I'm sure everyone else watching will as well. So Skyler, Gregg, Vincenzo, thank you so much for taking time out of your day to chat with me, to be here and to give advice to aspiring venture capitalists.
Awesome. Thanks, Aeryn, for organizing this.
Thank you.
Bye-bye.
Cheers.
Have a great day.
Bye, guys.